No, I've always been saying it's the team that works. The team has done a wonderful job, and I think we've been able to sustain the entire pressure. It's a combination of several things, a combination of positioning, strategizing, getting the right locations, the right product, the right pricing, and of course a lot of hard work from the team. So I think they have been consistent. They have done well. And fortunately, we've been in geographies like Bangalore and Hyderabad, where things have been very good, and that has helped the cause.
Sure. Okay. How's the commercial real estate space panning out for you? Are trends looking strong in that segment?
Yeah, commercial has done extremely well. The office leasing and also retail are trading good, and we plan to get exit rentals of about 1,000 crores now this year, which we had estimated, and which I think we've overshot that also. And the one good thing about commercial leasing is, the vacancy levels are minimal, or almost zero, and the other part is the rentals are becoming a little more stronger, in the sense that the price rentals, so you're getting a good return on your capex, because otherwise on one side there was a time when your capex was going up and the rent yield wasn't being commensurate to your capex. So now it's almost matching, and we are getting a good yield on investment, which is quite positive and gives us the courage to do more. And there is good demand. That's the good part of it, and we see a lot of visibility. Even for this current financial year, we see a huge visibility.
How is it that you're releasing, or rather seeing trends pan out? Are you getting a significant premium to the current rates right now?
Yes, actually, certain pockets in Bangalore for the leasing, the price has gone up, and it's like the outer ring road is now touching around 90 rupees a square foot. At one point of time, 10 years ago, we were talking of 25 and 30 rupees a square foot, and that has really panned out well. Even Whitefield is doing well. Whitefield is around 55, 60 rupees. And all in all, it's a positive trend, and the companies are willing to pay for good quality grade A spaces. And that's the key. The key is your location, and the key is also the type of product you develop. So if you've got a good product, you've got a good location, you've got a winner. So now this is where we need to work on. Actually, at the end of the day, our planning should be right, the product should be right, the finishing should be right, and ultimately the confidence should be there to your MNC client that the delivery will happen under committed timelines, and they're willing to commit to you. And not only today, apart from leasing, there are many large companies who are even willing to buy, which is again a good trend. So when the buy thing happens, some large transaction takes place, so that also adds up to the overall thing. So far, of course, in this current fiscal, we haven't done any sale of office, but going forward, there is going to be a lot of traction on office sales also.
And what about the current occupancy rates across your various office properties?
It's all 90% plus. It's in the high 90s, maybe 95, 96, 97%. Only some few properties that would have just got ready, those also more or less they are getting spoken for and getting filled up. So like I said, we have near almost zero vacancy levels.
What's the current debt status of the company looking like, and what steps are you taking towards reducing any financial leverage?
Yeah, see, debt levels are there, but see, now it's a question of creating assets, retaining them. So most of our debt that is there on the books is towards creating the capex assets. Like now we have the hospitality assets, retail malls, as well as office which we are retaining. So obviously some part of it comes from internal accruals. The balance, there is a dependency on debt. But then these are all self-liquidating debt, because where the rent goes to pay off the debt, it's a month-on-month liquidation that happens. But at the same time, we believe that there should be some methodology where we get less dependent on debt. So we are all the time we're working on something innovative. See, the only way we can do it is be efficient. Even our residential sales, try and sell as much as possible, collect our money which is due to us, and overall make sure that the entire organization is efficient and less dependent on debt. At some point of time, we are working to see that our debt levels come down much less than what they are today. But that's work in progress. It has to go up for it to come down, and that will also happen, and that will happen pretty soon. But at the same time, I must say we are pretty comfortable on the debt levels. We are able to service our debt, and we don't have any stress in the system in terms of cash flows. So because that's the important thing, because you have debt and you're unable to service it, that's where the pain point comes in.
Sure. Do you believe that the cyclical momentum for real estate players remains supportive?
No, I think, see, housing in an Indian context is a need. It's people do need houses. There is, of course, having said that, at the same time, I must say, in whichever region we are working in, there is supply coming in gradually, but it all depends on the amount of faith and trust the customer has with you vis-a-vis somebody else. But all in all, there is demand. All in all, there is an offtake. And the good news for the buyers is that, for them, the price points really haven't spiraled upwards. Though they now, for us as a developer across the industry, with the new input, the new GST regime, with the input tax disallowance to the developers for the new projects at least, the cost of that adds up to our cost. So net, what really happens is we have to do a balancing trick. We have to see how we can offer a product which is still affordable, which the ticket price which still the customer can afford to buy, and at the same time how to keep our costs down, and at the same time make margins. So if you are able to do that properly and offer a good product, a decent product to our customers, I think we won the game. And going forward, there's enough momentum, there's enough demand, and it's coming from different geographies. So we are pretty positive. And we believe, even from whatever guidance we gave in the last year and current year, for this fiscal, we will up this by at least 20 to 25% more.
Great to have you on the show, and good luck for the future quarters ahead. Thanks so much for joining in.